Ever wondered why so many traders, even people who really seem to get the markets, end up losing money?
Yeah, it's a puzzle, right?
It really is. And it often isn't about finding that perfect strategy. We're going to dig into why today. We're doing a deep dive into Dr. Alexander Elder's classic book, Trading for a Living, Mind, Method, Money. What's really interesting about Elder is his background. He's both a trader and a psychiatrist, gives him a unique angle.
Definitely. And our mission today really is to pull out his core idea that your mind, that's your number one trading tool. Forget fancy indicators for a second. We'll explore how getting a handle on your mindset, nailing down your method, and managing your money, well, how that's the real shortcut to thinking like a pro.
Okay, let's start with the mind bit then. Elder basically says most losses aren't down to lack of skill, but raw emotion.
Exactly. Fear, greed, impatience, the usual suspects.
Right, like the market dips and that gut feeling, that fear just screams, sell, get out, even if logically you maybe shouldn't.
Or the opposite, you have a great trade, feel invincible, and suddenly you're taking these wild risks. Greed kicks in.
Yeah, and impatience too. Jumping into trades too early or too late just because you feel you have to do something. Elder really hammers this home. These emotional waves sink people, not bad charts.
And what stands out for me is his focus on self-discipline. He actually says trading should feel, well, kind of boring.
Boring, like not exciting.
Yeah, like running a well-managed business. Predictable, systematic. That's why he's so big on keeping a trading journal.
Ah, the journal. But not just for wins and losses, right?
No, not at all. It's for tracking your mindset. What were you feeling? What were you thinking before the trade? After? The journal basically becomes your teacher, showing you your own emotional patterns.
Okay, so the mind is foundational. Makes sense. But then how do you actually trade? What about the method part Elder talks about?
Right. Once you're working on the internal stuff, you need a process.
And he doesn't just give you one magic indicator, does he?
No, not really. It's more about teaching you how to use common tools logically, things like moving averages, to see the trend.
Smoothing out the noise.
Exactly. And then momentum tools like MACD or RSI to gauge the strength of the move. But the key is structure, a plan, not just clicking buttons when something flashes.
So what makes a good method then, according to Elder?
Well, his message is super clear on this. He says never, ever enter a trade unless you know three specific things.
Okay, what are they?
1, your exact entry point. 2, your profit, target your exit plan. And 3, your stop loss, where you cut your losses, no questions asked.
Entry, exit, stop loss. Got it.
If you can't define all three beforehand, you're basically gambling, not trading. A good method has to be defined, repeatable, and, crucially, take the emotion out of the decision as much as possible.
That's a really strong framework. No more guesswork. But okay, even with a solid method, you still need to manage your actual money, your capital. That feels huge. Elder has a famous rule for this, doesn't he?
He does. The golden rule, as you called it. And it's simple, maybe deceptively so.
Which is?
Never risk more than 2% of your total trading capital on any single trade.
2%. That sounds, well, really conservative. Almost too safe.
It might seem that way, but think about it. Elder implies that if trading feels super exciting, you're probably about to lose money.
Okay, fair point.
That 2% rule is all about protecting your account. Because you will have losing trades. Even the best traders do.
Right, nobody wins every time.
Exactly. What sets the pros apart isn't that they're always right. It's how little they lose when they're wrong. Your main job isn't hitting home runs, it's staying in the game. Long-term survival.
So risk management is actually more important than chasing maximum profit on one trade.
Absolutely. Focus on steady growth, protecting your capital. That's the core of it.
Makes sense. And finally, there's this idea of continuous learning he pushes, right? It's not just set and forget.
Not at all. He talks about reviewing your trades like an athlete reviews game film. Meticulously.
So keeping notes, looking for patterns in your own trading.
Yeah, and tracking your equity curve, that chart of your account balance over time, seeing the ups and downs and understanding why they happened.
So progress isn't just about the money you make.
Right. It's also about improving your discipline, your patience, just becoming a better, more controlled trader overall. So wrapping it up, this deep dive really shows that for Elder, trading success isn't about being the smartest person in the room or predicting the future. It boils down to discipline, having a solid process, and really tight risk control.
Master your mind, define your method, manage your money.
That's the triad.
So here's something to think about for you, the listener. If hitting consistency in something as tricky as trading really comes down